Good morning, everyone. Welcome to Business Morning. 55 minutes of current and relevant business conversations. That's what we do right here. Of course, what's going on around the world and in Nigeria. Those will be our focus on this episode of the program. As usual, I'm Ini John Mekwa. We start off from the global oil space where prices rose 3% as the U.S.-Israeli war on Iran disrupted Middle East supplies. But the pace of gains has slowed from past sessions after President Donald Trump is suggesting that the U.S. Navy could escort vessels through the Strait of Hormuz. And of course, we know that yesterday Iran told the world that they have shut down the Strait of Hormuz and no vessel is supposed to go through that route for this time. But we see Brent 2.87% up following all of that development. $83.67 a barrel. WTI is also up 2.58%. The price at $76.51. Just noticing here, we hardly see WTI in the $70 territory, but I mean, these are not normal times, so we can expect unusual numbers also to follow this. So Israeli and US forces struck targets across Iran yesterday, Tuesday, prompting Iranian strikes against energy infrastructure in a region that accounts for just under a third of global oil production. Iraq, which is the second largest crude producer in the Organization of Petroleum Exporting Countries, has cut output by nearly 1.5 million barrels a day, about half its production. That's, of course, because of storage limits and the lack of an export route because of this conflict. And President Trump has said that the United States Navy could begin escorting oil tankers through the strait if necessary, adding that he had ordered the U.S. International Development Finance Corporation to provide political risk insurance and financial guarantees for maritime trade in the Gulf. Obviously, this is welcome, but clearly it won't happen overnight. A naval escort would be helpful, but again, this effort would take time. And already we know that insurance companies have been saying they cannot cover that route at this time. So it leaves a whole lot of uncertainty and security risk for doing business in the Strait of Hormuz. We see the markets here in Nigeria closed positive yesterday, about 0.5% is what the oil share gained, and it's at 196,621.96. For the money, the market cap is at 126.198 trillion naira. Volume, value, and deals were all in the green at the close of trade yesterday. 86,689 deals traded at the close of trade. Top gainer, Sooner Shore, UACN, and O&O. They were the top gainers, getting investors' funds, and then top losers, those who experience profit taking most. Fitson, Mikio, and Alex. Alex, we see, is back in the news, this time not so positive. Profit taking is what is experiencing. Top trades, FTG Insurance, Sterling NG, and Japol Gold being consistent there in the news and in the face of investors. And the results are still streaming in from the NGX, from the corporates to the NGX. The latest we see is Dangote Sugar Refinery PLC. Let's see how they performed full year 2025. So we see it's captured as net loss reduced. So that means 2024 was not a very good year for Dangote Sugar Refinery. So we see there's a 66.7% improvement when you compare full year 2024 and 2025. So it's reduced to, so it's a loss, 64.12 billion right there. For revenue, they have a projection of 919.3 billion, driven by upward price adjustments and increased sales volume. That's what Dangote Sugar is expecting. But we see that gross profits climbed last year, 122.63 billion, nearly fourfold from the previous year. Operating profit also rebounded to 81.12 by the end of September, reversing the operating loss from the previous year. Loss before tax tapered. Remember, we did see that it's a loss net. This is the net loss. But we see that before tax tapered, so looking better than 2024, but I guess they still have a whole lot to cover, a whole lot of ground to cover. But I guess we'll put an eye on this, the revenue projection, and see how well that will go. And then moving away from that, let's see what else is happening in the economy. The NESG, the Nigeria Economic Summit Group, the Business Confidence Monitor is out, and they say there's a record high of 117.2 points from 105.8 points and 111.5 points in January. Nigeria's business environment sustained its expansionary momentum in February. This is for February, recording its strongest performance in over 1 year. The NESG Business Confidence Monitor current business performance rose to a record 117.2 points from 105.8 and 111.5 points in January and February, respectively, and this signals improved business condition. The sectoral breakdown indicates improved performance across all 5 sectors, which they keep their eyes on. There's the non-manufacturing. Non-manufacturing has gone up to 128.9 from 115.3. Manufacturing has gone up to 121.1 points from 115.8. Services has gone to 109.2 points from 102.1. Trade has also gone up 108.7. That's what it is now, from 92.7. And agriculture is at 109.8 points from 99.5 and moved into the expansionary region in 2025. To other stories now, President Bola Tinubu has nominated Mr. Taiwo Oyedele as the Minister of State for Finance, replacing Dr. Doris Uzoka-Anite. Ms. Anite, we know, will now be moved to the Ministry of Budget and National Planning as the Minister of State there. That will be her 3rd portfolio in the administration. President Tinubu has conveyed this nomination of Mr. Oyedele to the Senate for confirmation. It's captured in a letter to the Senate President, Godswill Akpabio. Until President Tinubu nominated him as the minister, Mr. Oyedele has not been a stranger to us. He's an economist, an accountant, public policy expert, and mostly known as the chairman of the Presidential Committee on Fiscal Policy and Tax Reforms. Yes, the new tax regime was birthed under his guidance as Mr. Oyedele. He attended Yaba College of Technology, where he obtained a higher national diploma in accountancy and finance. He attended Oxford Brookes University and earned a BSc in applied accounting. He also completed executive education programs at the London School of Economics, Yale University, and Gordon Institute of Business Science, as well as Harvard Kennedy School. Mr. Oyedele spent 22 years in the private sector at PwC, which he joined in 2001, and rose up to become a fiscal policy partner and Africa tax leader. He's also a professor at Babcock University in Ogun State and a visiting scholar at the Lagos Business School. And still around the Finance Ministry, the Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, has signed the presumptive tax framework, and it's aimed at simplifying tax collection and expanding the tax base. And the policy allows tax authorities to estimate a business tax liability where proper financial records are not available, helping to bring more informal operators into the tax net. Those affected include market women and traders, artisans such as mechanics and barbers, POS agents, and small businesses with low turnover.
Our aim is to ensure consistency, prevent arbitrary assessments, best of judgment, and so on and so forth, and to protect small businesses while ensuring the continuous growth of the Nigerian economy as we have been experiencing in the last 2 quarters, and in particular the last quarter of 2025, the growth rate was above 4%. It's headed in the right direction. It's not quite where we want to be. We are looking at in the immediate term to try to get to 7% GDP growth, on our way to His Excellency Mr. President's clear stated target for all of us to strive for, which is by 2030 a $1 trillion economy. So we are looking to protect small businesses. We are formalizing the framework that will provide small businesses with a structured entry into the formal economy. So from small businesses, from informality, we're looking for them to be able to come into the formal sector, to be more formalized and to grow. At the same time, we'll expand the tax base, not raising taxes, but expanding so that each bears his rightful contribution to the common purse.
Well, let's go back to the market a bit. We did see the results from Dangote Sugar. Well, MTN also, they shared their results, and that brings us to some of the promises that they made. You know, when they got that increase in tariff last year, we've seen a good result coming from a lot of the telecoms, MTN being one of them. We saw total FDI inflow there. Even in the capital importation, we saw that the telecoms really enjoyed a lot of positive attention. The first 9 months of last year, MTN got 392.2 million. For the third quarter of 2025, inflow surged. Total industry investments also exceeded 1 billion last year. Operators deployed over 2,850 new network sites. And it's all premised on what they got when they got the approval on the tariff increase in tariff, which a lot of people complained about. But let's find out this morning if it's been worth the while. Hearing from MTN as a major player in that industry in Nigeria. We have the Chief Financial Officer of MTN Nigeria right here in the studio, Mr. Modupe Kadri. Mr. Kadri, good morning. Welcome to the program.
Good morning. Thanks for having me.
Yeah, so if we got the new tariff last year,
yes,
we know that your money has increased. We didn't see loss in your results. We saw inflow. We saw, even when we saw the result from capital importation, you had more money coming than usual, than before. So congratulations.
Thank you very much.
But you also made some promises, you know, at that time.
Yep.
Has your new or your increased income, has it translated to better quality services?
Yeah, okay, so if you do recall, while I was here the last time, at the height of the negotiations or the request for the tariff increases, I did say that the issue with the telecoms market is that it's capital intensive. So it's one of those things where even if you have the capital to deploy, it's going to take some time for those things to gestate. So what we've done, as you could see from our numbers, is that right throughout the year, we spent over 1 trillion, and I repeat that, that's 1 trillion naira in capex over the past year. Now that's up by almost 100% or twice, from 440 in 2024 to 1 trillion. So yes, it's going to take a while for these things to gestate, and I'll say up front that we're not out of the woods. But we would continue, now that we've got a business case to make those investments, we will continue making those investments.
So your FDI also, capital importation, you have a lot of foreign investment coming in?
Well, maybe that's to the larger context of the economy, because don't forget that MTN is largely funded by, from its operational cash flows. So we didn't go to the market for anything. We didn't actually raise new debt instruments. So we're actually funding our growth from operational cash flows. Yeah.
So, I mean, I must say we saw a lot of positive results, not just your financial results. I mean, on the stock market, following the market daily, investors are very much positive towards MTN as this thing. But I mean, the consumers in the, I know there's a lot of collaboration going on now with some international bodies who come and all of that. How much impact can we expect that to have for our rural consumers?
Okay, so I think on that question, because you really raised a very delicate issue, and that's on the population coverage. And you'll find out that with the increased population, there are new areas that were previously classified as rural that is, needing population coverage. So what we've been doing is to find means of accelerating our investment in those areas, trying to make a business case for it, and we'll continue to do that over the years. So as demand continues to increase, but not only in the urban areas, but also out of in those what you call rural areas. But in reality, I mean, most of us, over the holidays in December, we travel through the country. And you actually see pockets of areas where there's no coverage. That just tells you the size of the opportunity that is ahead of us and the amount of investment required to make that happen.
So are you doing that through the mobile virtual network operators, the MVNOs?
Yeah.
Are those the people you're working with?
Well, we
obviously they are not competition because they are depending on the infrastructure that the big guys have already.
So exactly. So what we've done for record purposes, we're the first MNO to onboard the MVNO, so it's part of our strategy. It also ties to our roaming strategy, which we've done with T2. So in other words, infrastructure sharing is the norm in the industry because you can't do it all. So it's now up to these MVNOs to create niches for themselves, areas where they'll be able to serve. And, we are here to support, basically, as any manner.
But we still need to expand our infrastructure, yeah?
We do, but again, hey, 1 trillion in a year, that's almost 20% capex intensity. So the issue is, for there to be a business case, you have to continue to invest in those areas, and it has to work. The numbers must work, and our job is to make the numbers work.
So let's look at the outlook for the industry this year. So you guys committed to about 1 trillion, and then you also say you're going to exceed the 2025 investment, so maybe it's 2 trillion in 2026. And then
I hope my bosses in the head office are hearing me. Yes, that would be a dream come true.
And then you have the bridge projects. That's supposed to deal with the fiber and all of that. So rural connectivity, which we have also mentioned. We hope to be able to stay anywhere in Nigeria and do business. I mean, that would be beautiful. And that would decongest the part we call the urban areas.
So it's true, but we also have to slow down and to be a little bit realistic here, because again, while this is good, it has to be supported not only by government policies, it also has to be supported by other operators, because these amounts of investments are huge. And for it to work means that we must be able to have. So part of the challenges we have with fiber rollout, for instance, you have some subnational governments, state governments, right-of-way permits, and all those things. Huge bottlenecks that makes these things a little bit difficult. But MTN will always lead, and we are not shy to trace this.
And you always give your. But I hear that it seems that the consumption pattern is changing in Nigeria. It's more on data now. Is that correct?
That's correct. And I mean, data is, so let's put it, everything in this studio is driven by data. So, so let's start from home. So, and that's even people are doing the way, they pivot, they run their businesses. People are actually having online businesses. And it's actually more efficient, to be honest, in terms of that. So we are seeing a declining growth in voice. That is true. But you're also seeing an increase in data and digital services, and which is the way we should go as a nation that wants to lead in the tech space. And I think we're heading in the right direction.
And we're heading to a $1 trillion economy.
Oh, anyway. Yes, absolutely. And we're here to enable that.
All right. Thank you so much for your time this morning, Mr. Modupe Kadri, the Chief Financial Officer at MTN Nigeria.
Always a pleasure talking to you. Thank you.
Thank you. All right, let's take a break now. When we come back, of course, there are other conversations awaiting you. There's the Africa Trade Conference, which Access Bank or Access Holding is powering. What do they have to offer? We'll discuss that after the break. Please stay with us. welcome back to Biz This Morning here on Channels Television, and we are discussing the Africa Trade Conference now. Of course, efforts have been on to increase intra-African travels, trade, especially at a time like this when we see geopolitical issues, forcing and rerouting trade and all. Can Africa depend on itself more? Perhaps that's what Access Bank wants to do right here. So we have right here in the studio the head Trade and Global Transaction Banking, Access Bank subsidiary, Mr. Rowley Sioro. Mr. Sioro, good morning and welcome to the program.
Good morning. Nice to meet you.
Good to see you too, sir. And we have Ms. Elizabeth Ogwegbu. She's the Group Head, Financial Market and Funding at Access Bank PLC. You're welcome to the program.
Thank you for having us.
Great. So ladies first. Let's start with you. Africa Trade Conference. This is the second edition. What's this about? Why are we even talking about this?
Okay, so as you rightly said, the first one was last year, 2025. It was a success. Intra-Africa trade has been one of the key priorities for Access Bank and the continent at large. We've realized that, of course, on the back of AFTA objectives, we decided to see how we could, they provide the policies, we come forward and of course try and see how we can bring all the relevant parties together. Intra-Africa trade, so as we all know as the continent, trading itself, is not yet prioritized. And what we're trying to do is to bring all the policymakers together, the capital providers, the logistic partners, and everyone who indeed needs to make the difference. So the whole idea is, bringing our own initiatives as Access Bank across the globe, across the continent, to try and see how we can fast track that initiative.
All right, Mr. Sioro, so it's Cape Town next week. It's a one-day event on Wednesday. Who are you expecting? What kind of conversations? I know she's just talked about trade and, bringing the continents closer. How do you intend to do this? And remember that we've been having a series of meetings. What makes this different?
Well, the conversation is about advancing trade across the continent. There have been a lot of talks, but this time around the emphasis is shifting from talks to execution. And like Elizabeth said, Africa's intra-Africa trade is pretty low compared to other regions. Africa has about 19% of world's population, but the GDP of Africa and the percentage of Africa trade to the world is just around 3%. And intra-Africa trade today is around 18% or thereabout. But in other markets like Europe, Asia, you see these numbers rising up to 60 to 70% and all that. So a lot of efforts have been made to advance the course of intra-Africa trade. And it started with the establishment of African Development Bank. And later we now have Africa Export-Import Bank, AFREXIM. And today we have Africa Continental Free Trade Area. So all is geared towards advancing trade across the continent. So for us as a bank that has a footprint across many markets in Africa, we believe that we can play a very pivotal role to advancing the course of trade in the continent.
And your theme this year is turning vision into velocity, building Africa's trade ecosystem for real-world impact. It seems like the real world has a lot to consider at a time like this. We know what's going on, from Iran to the United States, Israel, now the Middle East is, the real world has a lot to consider. So if we want to really build this Africa's trade ecosystem, it seems there's a whole lot, to consider. What are you considering? Who are those who will be speaking to? What issues at the event?
Yeah, the event is going to convene every party that has a role to play in the trade ecosystem, be it regulators, policymakers, importers, exporters, logistics providers, freight forwarders, SMEs, women, youth. So it's a conference that convenes everybody together. And one thing unique about this year's conference is that we're going to have a ministerial panel. So here we have ministers of trade and finance of various African countries.
How many countries are you expecting to participate?
Yeah, last year we had 28 countries that participated. And as I speak, about 63 countries we have registration from 63 countries so far. So we expect this year's event to be much bigger and much better than what we had last year.
Yeah, well, that number sounds impressive. Are they all from Africa?
Predominantly, yes. Predominantly. So we have a presence across 17 to 18 markets across Africa. So that in itself, in addition to other markets where we're not present. So as you rightly mentioned, about 20 to 30 countries we expect to be present this year.
So I know that one thing that seems to be prominent now at events like this is, some people call it the deal room and things like that. Do you have anything like that for this event?
Sure, we do. We have breakout sessions as well. We have deal rooms where we expect transactions to be closed. Those conversations that started last year, the idea this year is to get them signed off. So there have been other, of course, preliminary conversations that have been happening over the year. The idea is to get them signed in this particular forum.
And I know you mentioned small businesses. What sectors do we have, sectors that seem most interesting at this time?
So we have the SMEs, and following up from last year, quite a number of them on the agri space. So there's been a lot of talks about how we can boost non-oil exports out of Africa. And within Africa, oil and gas, of course, is another big space. Of course, coming up with the refinery, there's been a lot of talks around, how can we, amongst ourselves within Africa, dominate that space. So apart from oil and gas, the agri sector, we expect every other industry to be present.
Are you looking at the area of value addition? Because that's also another conversation that we need to push on the continent. Enough of exporting our raw materials.
Absolutely. So the value addition is there. There's a lot of backward integration as well. Historically, Africa has been known to be import dependent, but now we're beginning to see a lot more locally substituted goods being gotten from the continent. And the idea is, if Nigeria needs something as part of the substitutes for the final product, rather than importing from outside the continent, are there other areas within the continent where we can import from? So that is the whole idea of this particular conference.
So Mr. Isoro, you are head trade and global transaction banking. Now, if we are to talk about adding value, the issue of machineries and equipment, I wonder how much request, I don't know if you should put it that way, is connected to the importation of some of this equipment that could help us to add value rather than the finished goods.
Yes, that is the conversation that we're trying to push. That's the agenda we're trying to push. We've been preaching beneficiation, that we should not just be exporters of raw materials, but we should add value. And if you look at the flow of trade across Africa, so by the time you take out the top commodities and refined petroleum products, the next that you see are machineries. You also see trucks, because the road networks are not so good, so a lot of importation of trucks and vehicles, you see a lot of them. So it's an area that we want to support, and we are also supporting actively.
As Access Bank.
As Access Bank, yeah.
So that's even outside the conference. You wanted to add something?
No, I'm saying that, we've been extremely intentional in terms of how to bridge the gap, be it from, the cross-border payment solutions. Historically, and one of the complaints that we got from the last session is how can, the African continent itself trade amongst themselves from a currency perspective. And of course, Access Africa is one thing we created, where if you're in Ghana, you need to make a payment to Nigeria, you don't technically need to go through the dollar. You can debit your Naira account, pay in Ghanaian cedi, and that is applicable across the continent. And this was made possible by PAPS, which is part of Africa.
Because I wanted to ask, is it on the back of PAPS?
It is on the back of PAPS, and that has
so like Access Bank has its own customized.
Correct. We're partnered by PAPS, of course. So that has been made possible, and that has significantly increased trade flows across the continent. We're also very intentional about the type of products that we also push out into the market. We've understood that the SMEs and the MSMEs have typically not been focused on. So we've tried to digitize some of these offerings to also make it easier for them to be able to penetrate into the market, and we have seen intentional growth in that space.
So when you talk of the MSMEs, they are the bulk of businesses in a country like Nigeria, and I believe in most African continent. But when you talk of digitalizing their operations, and we see sometimes the reality is that some of the operators do not really have access or have limited access, to some of this infrastructure that we need. How do you handle that and still capture them?
So we've created a team specifically focused on the SMEs and the MSMEs. We've partnered with the development financial institutions as well, who want to create the necessary impacts in the continent. We have technical solutions, right, on the back of these DFIs and as well our own innovations internally. And over time, we've just tried to implement, the forum where we do the trainings and continue to retrain them on how to access this. And most of these are on the Access Bank platform. And then, of course, on the back of that, we've seen increased flow and traction. And where required in terms of clarity, they always come back to us. And this is not specific to, this is across all our markets, in all the markets we present ourselves. And I must say that Access is the largest trade bank in the UK. Internationally, we're present in 7 markets as well. So we don't only control trade across the region, we also do it internationally to support the trade in the region.
So let me go to Mr. Chege. Some of the lessons and revelations from 2025, obviously you would want to improve on it or expatiate on it for 2026. What are some of those highlights and areas?
Yeah, one of the things we took away from last year's conference was that Africa needs a platform like this to advance the cause of trade. And secondly, we also, what also was clearly echoed was conversations around lack of information or insufficient information. Then the usual challenges around the logistics in the continent and financing gaps. So those are some of the takeaways from last year's event, and we are clearly in touch with those who participated, and even those who never participated last year. Incidentally, they are among the first to register this time around, knowing what transpired. And we also have some testimonials from some of our customers in terms of how the conference has shaped the way they do business, has given them access. And if we are to say, how are we going to define success at the end of the day? The quality of participation, the quality of people that are going to be in the conference, the policymakers, the other players. Then secondly, the partnerships and deals that are sealed on the day of the conference. Then even beyond that, the long-lasting relationship that will be built from that conference. We want to have a conference that many years down the line, people will say, courtesy of this trade conference, I met so-and-so person, and my life has transformed. So that's what we're trying to put on the ground.
Yes.
Because for us, it's about impact in the continent.
So talking about impact and maybe the lessons from last year, are there some innovations, especially for the small businesses, the MSMEs and all, that you would be presenting this year? Innovations, products that's targeting them?
Yes. Now, talking about the SMEs and the MSME, one thing you find out is that you see a lot of informal trade happening, especially across borders. So we complain today that intra-Africa trade is about 16 to 18%, but the informal trade is around 70% in some of the borders. So what we've put in place, we put in place a product. We also put in place a supply chain finance solution. And we also put in place a targeted financing that support the SMEs. And we have a dedicated team across the continent that supports SME. So there's a panel that is going to be focused on SME, where we have experts that in that space, and also our head of SME is going to be in that panel. So it is the SMEs are the future of Africa, and we don't want to joke with the future.
So how can they participate?
So we have we've dedicated the platform, the Africa Trade Conference platform online, and if they can speak to any of the Access Bank staff as well.
Okay, so you can walk into any Access Bank.
That's correct. Yes.
And then you can go online and just check Africa Trade Conference 2026 and
yes.
You have functional phone numbers and all of that.
Yes.
What else do you want people to know about this conference?
I think it's important to just highlight that, just like what Rolly had said, that banking has gone beyond deposit on loans. This intentionality from a trade perspective is because of the feedback we've been receiving from our customers over the last couple of years, and of course on the back of the ATC 2025. We've had to, we want clients to understand that we hear them, and we're intentionally providing solutions that will solve the problem that the continent has, right? No one will solve Africa's problem if we don't solve it,
Sure.
right? And this is how intentional we are, and this is a real focus area for us going forward.
And I guess it's all beyond the money.
Correct. It's impact, and it's to see how we can bring Africa to the limelight. That's what
All
it
right.
is.
Okay. So Access Bank is inviting you to Cape Town,
Yes, we
South
are.
Africa, next week, Wednesday,
11th of March, correct.
11th of March in Cape Town. Thank you so much, and we wish you the very best.
Thank you very much.
Thank you so
Thank you
much.
for having us.
Let's take a break now. When we come back, well, they say true success is not just about being successful, but having a successor. We'll talk about that after the break. Stay with us. Welcome back. It's still Business Morning here on Channels Television. Now, Nigeria's private sector is largely built on founder-led enterprises. While many of these businesses perform strongly under active founder leadership, few are structurally designed to outlive their founders, and it's becoming a norm. But this is largely ignored, and it brings economic risk and succession also into question. Well, let's delve into this morning with the Managing Director of Meristem Family Office of the Meristem Securities Group, Ms. Kemi Ojenike, right here. Ms. Ojenike, good morning. Welcome to the program.
Good morning. Thank you for having me.
Great. Good to have you. So, I mean, I was just saying before we went on break that they say that true success is not just about, an individual being successful, but having a successor.
Absolutely.
So, obviously, this is what Meristem is trying to address. When you look around, we see it's very dominant in the Nigerian society. How does Meristem see this being solved?
Thank you so much for that question. The truth of the matter, like I'm sure you know, is that family businesses are critical to our economy. They contribute more than 50% of our GDP, responsible for more than 70% of the jobs. And in the process of their building, usually it's revolves around the founder. So you have this individual or group of individuals that come together and work extremely hard to build a successful enterprise. They are responsible for many jobs, many livelihoods, and on and on. But the truth of the matter is, unfortunately, in our system, we have those systems, structures built around the founder. The question now becomes, what happens when the founder is no longer there to run it? More often than not, what we see is that those enterprises tend to fail. And it's the reason why, if you just think about it and you try to identify businesses that have outlived their founders, you will struggle quite a bit. What we are trying to do is to, first of all, establish a mindset shift to understand why succession planning is critical. It's not the thing where you have a founder is approaching the end of their life and they begin to think about their legacy. No, it's actually an economic necessity, because many times we fail to take account for what we lose as an economy, as businesses, in our nation, in our society. When businesses actually don't transition, we do not think about the livelihoods that are cut short. We do not think about education that has to stop. We do not think of the production capacity of the nation that is impacted. And so our drive is to help more businesses realize that succession planning is extremely critical and doable.
So when you talk about succession planning, and I hear you also talk about the issue of orientation, the need for reorientation, I guess it comes in different ways.
Absolutely.
So mostly conversations you hear from founders of businesses, I want my children to inherit my business. And then the children grow up and do not have interest in that line of business.
Yes.
So it now begs the question, And when you talk of orientation, do you talk about it from the founders or from the employers? Should it be handled legally, structurally, family? You know,
Such an important question.
I know, right?
The truth is, like you said, many times succession planning is usually through that narrow lens of let my children take over. But there are many different aspects to it that we need to pay attention to. First of all is the preparation of the founder themselves. Because when you talk about children taking over, those that have attempted to do so, where the next generation actually come into the business, there's a lot of friction. It is in that moment that you realize that there are certain things that the founder may have taken for granted, such as control, decision-making ability. The children also come with their own way of doing things, and then you have a clash. And what should be an expansion of capacity becomes a breeding ground for conflict. And so one of the things that we push seriously is that this preparation is multifaceted. First of all, there are so many ways to achieve succession. It does not have to be the narrow way of your children taking over the helm of affairs. Because like you said, what if they are not interested? What if they don't have the capacity to do so? What if they are not even interested in doing so? So we often preach the preparation of the founder. There is a psychological process in handing over something that you spent 40, 50 years of your life building. And then there is determining how the next generation, your children, fit best into the business. It does not have to be as the CEO. There are many other ways that they can be productive parts of that business that will not impact their ownership of the business. And then we speak of the structures that are required, because you do have to set up the right structures and systems that ensure that that business can thrive without you. So it's multifaceted, and it needs to be approached as an important project with a lot of guidance.
I think you should elaborate more on when you say does not affect their ownership and structure. I think your children do not really have to be active in the business for them to own the business. Maybe we should explore that a bit.
Absolutely. So there is a difference between the ownership of a business and the management of a business. Many times families intertwine the two. So they think if you're going to carry this business on, you need to lead it. But that's not the case. I can be an owner, a shareholder, with the ability to influence and oversee decisions without being the person managing the day-to-day of that business. And ownership should not be a requirement for management. A business should be managed by those who have the ability to do so in the best way possible. Because ultimately, what you want is to ensure that what you are protecting, the value you've created, expands, it grows. So you do not want to, in the name of a sentiment that is not correct, hand it over to those who do not have the ability to run it. Your children can be owners. They do not have to be the managers. They can operate in other capacities within that business, but they do not have to be the sole decision maker, because that's a lot of pressure on them. And that is you assuming that because they own it, they've also inherited your ability and your capability, and you cannot inherit competence. You have to build it.
I mean, this is really interesting. I think a lot of entrepreneurs really need to hear this. But who are you talking to now? Are you talking to someone who's, we just talked about SMEs and how much they are contributing to the economy. So obviously, their sustenance and succession would also have an impact on the Nigerian economy.
Absolutely.
Yeah. So are you talking to the manufacturer? I don't want to say down the road, because we don't have manufacturers down the road, even though we wish we do. We have more of traders. So who exactly do you think this message is for?
Honestly, in the line of our work, we've seen that typically those who think of succession planning are those who advanced in years, they're looking to retire.
And by then it's a bit too late.
It's late, because there's a lot of damage control that you need to do at that point. It's still doable, but you can maximize time if you start much earlier.
How early is early? First year of business, 5 years down the line, 10 years?
Honestly, ideally, as you are building your business strategy, you should build in your succession plan into it. And here's what I mean. You already have a business that thrives. You have cash flow. You have customers. You should already be thinking about how that business can run without you. And so what that means is that as I'm building structure, I'm not doing it because I'm just trying to tick a box. I'm doing it with the mindset that if for any reason I cannot be here, and we're talking about succession planning, what if for any reason, you actually cannot be present in the business. You do not want to run a structure that collapses in your absence, even if it's not about handing over to your children. So honestly, the best time to think of succession planning is as you are thinking of making money, as you are thinking of building your customer base. Because not only is it a nice to have for the sustainability of your wealth, it's also a compliance issue. It's also a sustainability issue. It's also a resilience issue. When there is pressure, when there are risks that you did not foresee, the structures you created to ensure the continuity of your business is what will sustain that business, even when you are there, and even for your peace of mind. Succession is something that you do not want to look at from the narrow lens of, let me simply hand it over to my children, but from the perspective of, let me build something that will last for generations and will give me peace while I'm still alive.
So, do you think that on the average, maybe most Nigerian entrepreneurs have the issue with control? Do you think that's why people don't really, because even in some instances, some parents find it reluctant to empower their children to take control of the business? You know, so is it a cultural thing? Is it, I mean, you talked about orientation before.
I think it's a human thing. Think about it.
But does it really happen like in the Western world?
The difference there is structure, and I'll explain. It's an orientation thing in that when I have given all that I have, think about the stories of those who build. They come from significant difficulty most of the time, and they have given a lot to build. Now, because of that process or that mindset of waiting till later to plan for succession, the children usually do not understand the journey. They don't understand the process. Even employees, for instance, are not being built to take over. So at the time when that founder is ready, you have individuals that are either not ready, are not familiar with the process, are coming with new ideas that you are concerned about. They haven't been tested. So understandably, many people, their businesses are like their first children. It's not easy to let it go. You also have those that have attempted to let it go, part of it, and they've been burnt, right? So you really can't blame the founder. That's why what I said at the beginning, preparing the founder is just as important as preparing the successor as well.
And it seems like preparing them is becoming more complicated, because now we have AI in the world, we have trade tariffs, we have the war going on. So there's so many current and growing concerns, you know, if you want to really build your business to be resilient.
Yes, honestly, and now is the time. If anything, the conflicts that are going on are another reminder that a succession plan is critical, because those who will stand the test of time in times of conflict are those who have their structures in place. For instance, imagine a business that has dealings, cross-border dealings. Without a structure, if they are simply reliant on the founder's relationships, the founder's connects, imagine a founder that is stuck in a region that they cannot leave for one reason or the other. That business is grounded. You know, and so succession planning is a resilience strategy. It's necessary if businesses will grow, if they will be sustained beyond that one individual.
So if a founder is to look beyond the family, so it's obviously next to look at the employees. I know of a business, an individual who has done well in Nigeria. His children are not at the helm of affairs. He has a couple of businesses, and I really admire him a whole lot. It's very rare in Nigeria. So, but you also talked about how some may have attempted and gotten burnt. What can a founder or an entrepreneur look out for? You've seen some companies train some maybe employees, maybe they have good future plans for them, and then the employee gets trained and then leaves. You know, so there's so many risks and all of that. So how do you advise that an entrepreneur chooses or prepares employees, you know, for this succession?
So I would say two things. First is the need to document. There are many things that rest in the memory and in the minds of the founder. Things like their experiences, their lessons, their mistakes, things they've done right, things that they've done wrong. And many times we take it for granted that those things are not tangible financial assets, so they are not important, but they are critical. Because documenting those things is essentially you codifying the DNA of the organization. And what that does for you is that once you have that defined, anyone that comes in understands what that organization is about. It's almost like you take the DNA from the founder and then you systematize it in that organization. Documentation is extremely critical, and it is often underestimated. And it's one of the things that we push our clients to prioritize in Meristem Family Office. You need to document your journey. They need to know where you are coming from. That's the first thing. The second is to set up a system that is implemented step by step by preferably an external advisor that understands you. Because when you are in the fray and you are in the process, there are many things that you cannot see. But when you have third-party advice, someone that has a bird's eye view of everything and is not emotionally connected to that venture, they are able to better guide you on what needs to be done and what you need to pause on. And so documentation and professional guidance, I would say, are two ways that founders can address this challenge.
No, sounds really interesting. I hope we can see more of it.
Absolutely.
In
It's
Nigeria.
critical, so necessary.
All right, thank you so much. Managing Director, Meristem Family Office of the Meristem Securities Group, for sharing those tips with us.
Thank
I'm
you
sure
for
a whole lot
having
of
us.
people will really appreciate it. Ms. Kemi Ojenike, and wish you the very best.
Thank you.
All right, well, we are unable to go global today, unfortunately. I guess we've been having very interesting conversations. I mean, the succession one, really interesting there. I hope you can go back to our YouTube channel and watch it again. I know you would really get some tips from it. So that's it on the program today. Thank you so much for being a part of Business Morning. I'm Ini John Mekwa, wishing you the best of the rest of the day. Bye-bye.